Shell is the FTSE100's oil Goliath, and for us investors, the most striking thing about it is its whopping dividend yield, which is ticking along at 5.75%.
As lovers of cash flow, this is an amazing yield for our portfolio alongside capital growth, but dividends have been flat for several years and experts are not expecting any rises anytime soon.
Is the UK stock market's #1 oil kingpin still worth investing in? Let's check it out. Welcome to Money Unshackled, the investment channel that sets you and your finances free. This is Andy, I'm Ben, and if you like what we have to say, click the like button, hit subscribe and check out our new website.
Also, if you want to support the channel, then check out some of the links in the description below where we've listed loads of cool stuff that will help you become financially free, including up to £100 cashback when you sign up to one of the peer-to-peer platforms. Let's get into it.
The FTSE100, still a haven for blue chip companies. Doommongers in the media like to imagine that Brexit and US-China tensions will spell the death of the world economy, despite centuries of prosperity, growth and innovation. Shell is a cornerstone company of the FTSE100, making up 11% of the total value of the top 100 companies on that index.
Dividends, good yield, but where's my growth? Check out their recent dividend history. Shell have flatlined their dividend payouts at $1.88 for the past 5 years and are forecast to continue this trend into the current year. Shell announced their dividends in US dollars because they are an epic global company and dollars are the currency of the world, and of course oil is priced in dollars.
They choose to be listed on the UK Stock Exchange, but like many companies on the FTSE100, their trade is global. What does this flat dividend line mean for us as investors? Well, a yield of 5.75% is brilliant for a blue chip company. But this chart tells us that Shell aren't willing or aren't able to grow their dividends, so investors have been losing out each year to inflation. We like to see companies growing dividends at least in line with inflation.
A reliable 5.75% yield is enough for us investors to stay around for, but let's check out some of the capital growth to see if that sweetens the deal. Stock price. Here's Shell's recent stock price history. We can see that it's been tracking slightly upwards over the years and it is currently at a relatively high price point when compared to its recent history. Could this mean the price is more likely to fall than rise in the next couple of years?
It's impossible to say, but with the US-China trade war looming and a pinch of Brexit uncertainty, we wouldn't be surprised if the share price were to fall in the short term, especially in the event of a global downturn, which would likely impact the price of oil. But Shell's history of steady share price growth is one check in the pro column for this stock.
Price earnings ratio. As of April 2019, Shell had a price earnings ratio of 11.3. The price earnings ratio is calculated as share price divided by earnings per share. So the higher the share price, the higher the price earnings ratio. Likewise, if companies' earnings fell, the PE ratio would increase. We want to see a low PE ratio compared to its history and to its competitors, letting us know that we're getting good value. But don't forget that a low PE ratio could mean that its future is bleak. Perhaps other investors know something that you don't.
We can see that the share price had fallen over the last couple of years relative to earnings, so to invest now would be a bargain price compared to a couple of years ago. 11.3 is also low compared to one of Shell's main competitors in the oil industry, ExxonMobil, who at April 2019 had a PE ratio of 16.5. This makes Shell's PE ratio 32% lower than Exxon's, possibly making Shell a good place to invest in oil in terms of value of share capital.
Long-term horizon. We also need to look at soft factors when predicting the future performance of a stock. Let's look at some of the risks for Shell.
Oil as a dying fuel. There isn't much of a worry that oil reserves are going to dry up anytime soon, despite public perception. There's tons of the stuff hidden away under the earth, and we're still finding new sources of it all the time. The problems are rather practical and political. New sources of oil are being found in the world's oceans, but getting drills to them isn't easy. And there's the environmental impact of accessing that oil to consider. New fracking technology could keep the oil industry going for a long time, but there is strong political pushback against such projects due to the perceived impact on the environment.
As the world turns to new energy sources such as wind and solar, the demand for oil will likely fall, but a company as big as Shell will surely adapt in such an eventuality. Besides, when the sun isn't shining and the wind isn't blowing, oil is going to be one of our main fallback fuels for many years to come.
Should I buy that stock? In summary, we believe that Shell is a reasonable stock to hold in your portfolio. Its high dividend yield, solid PE ratio, strong share price growth, and history as a solid member of the FTSE 100 make it a dependable cash flow asset. But its dividend is stagnating, and its long-term horizon is littered with potential pitfalls as the millennial generation demand cleaner energy.
I have held Shell in my portfolio for many years, and I will continue to hold whilst those juicy cash flows keep coming in, but buying directly into stocks is not the only way.
Because Shell makes up 11% of the value of the FTSE 100, why not just invest into a FTSE 100 ETF tracker and benefit from exposure to this wonderful company? Question of the day: do you hold Shell shares in your portfolio? And if so, how do you rate their performance? Let us know in the comments below.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.